Hello, and welcome to the Thematic Intelligence Podcast, a global data thematic intelligence. We track over 100 tech, industry, ESG, and macro themes impacting all major sectors. I'm Martina Raveni, and today I'm joined by Clarice Brambilla, who is an analyst in the Energy Transition Division here at Global Data. Hi, Clarice, how are you?
Hi, Martina. Thank you for having me.
Welcome to Thematic Intelligence Podcast.
Thank you.
It's a pleasure to have you here. So you're about to deliver a webinar towards the end of June, which is called Energy Transition M&A, Key Trends and Predictions in the Run-Up to 2030. That sounds really interesting, and you will analyze current market trends and forecasts and what direction, in a way, the industry will take in the coming years in terms of green technologies development and deployment. In today's episode, we decided to focus on renewables and how they do position in the current and future market. So I'd like to start by asking you, what's the current state of the renewables M&A market and what has the trend been?
Yes, so first of all, hi Martina, thank you very much for having me today, and that's correct. I will be hosting a webinar towards the end of the month, and today I'll talk about renewables and the current M&A market for renewable energy. So at the moment, we are witnessing a decline in deal activity in the renewable power market, and this is happening pretty much globally. This has been caused by high interest rates, geopolitical issues, and obviously a recession or recession concerns. And these are some of the major macroeconomic factors behind this decline. One thing that I do want to make clear for our listeners, though, is that this doesn't mean that altogether the renewable energy market or the industry altogether is witnessing a decline, or that investing in renewable energy was a fad, by no stretch of the imagination. If anything, capacity addition and investment in new renewable projects has not diminished. In fact, annual renewable capacity additions have actually increased by almost 50% to nearly 510 gigawatts in 2023. That's the 22nd year in a row that renewable capacity additions have set a new record, and this is according to the IEA. So I just wanted to make that clear in the sense that there's a clear distinction between what is happening within deal activity, M&A activity within the sector, and the overall growth of the renewables market. So, in a way, as I just said, because the industry itself is performing well, it might be interesting actually to learn that the deal activity is diminishing. So to just put some figures out there for our listeners to have a bit of a clearer view of what I'm talking about. So in 2022, renewables M&A witnessed an all-time peak. We're talking about $771 billion worth of overall investment, overall M&A activity in this sector. And this figure declined substantially in 2023 with a total of $559 billion. So like I said, it could be interesting to sort of understand like what has driven the overall deal value to diminish so much. And I think a couple of factors need to be taken into consideration. So when we talk about M&A activity within the field of renewables, a lot of it is driven by oil and gas companies. So oil and gas companies feel a pressure, whether it's, from society, whether it's from governments, whether it's from their own investors, due to both, the threat of climate change, but also their own investors that are concerned about potentially, not being able to stay viable in a world that will rely on renewable sources of energy in the future. So they try to diversify their assets to sort of cover themselves and feel safer that they will remain viable long term. So in 2022, as we all know, prices of oil and gas soared to some of an all-time high. This meant a couple of things. It meant that both it was easier for oil and gas companies to have, a greater income that allowed them to be more financially comfortable. It was a more efficient time for them to be able to invest because of higher profits that they were making from high oil and gas prices. They were able to invest more comfortably. So this was a year that they invested in there was different M&A activity, but some of it was also in renewable energy. So for example, in 2022, two of the biggest deals deals, in fact, were both acquisitions by the British oil major BP, which paid more than $10 billion for a minority stake in the Asian renewable energy hub in Western Australia, and over $3.5 billion for the US renewable natural gas biomethane operator Archaea Energy. So both by an oil company. Same thing in 2023. One of the biggest deals was carried out by another oil and gas company, US gas company Sunoco, which acquired New Star Energy for $7.3 billion, company that was a distributor of crude oil as well as renewable fuels. So this is why then we can understand why in 2023 then this figure diminished. This is because then one potential explanation is that oil and gas companies then felt the need to do so less. First of all, prices were readjusting, so the profits weren't as high as they had been the previous year. And also, they had invested in renewable energy, so probably satisfying both demand from governments or from their own investors, and also seeing that the world, due to, the war happening and the oil and gas, there was a strong dependence from oil and gas, which probably led to oil and gas companies thinking the product that we sell is something that very much our society is still relying on. And so maybe we shouldn't be so scared of renewables taking over in the future. When it comes to then looking at M&A activity from other companies, not within the oil and gas sector, the decrease in activity from 2022 to 2023, that can be explained by increased prices due to the inflation and the fact that there were less government incentives. And I'll talk a little bit more about the challenges that companies have been facing, but that would explain why it was a great time for oil and gas companies to invest in the renewable sector, perhaps not the best time for other companies as well. This doesn't mean that in general the renewable energy sector isn't booming or isn't at an all-time high in terms of other investment, but it can mean that companies are investing in greenfield projects. So they are basically starting their own companies from scratch or starting their own projects from scratch. So again, just because the activity in M&A specifically isn't happening doesn't mean that there isn't investment going into the renewable field.
Thanks very much. It's really interesting, and also thanks for clarifying, because the fact that the M&A diminished sound to me a bit counterintuitive, but yeah, that's perfect clear now. And out of curiosity, you said, of course, that the oil and gas sector is driving its M&A activity in renewables, but according to your research, are there any other industries that are following it?
Yeah, so for example, I think, sometimes when we think of M&A, we probably don't think of governments, but the government of Germany, for example, carried out a substantial deal last year investing in renewable energy. You will see the figures in my webinar as well, or talking about more deals more extensively. But yeah, definitely not just when it comes to oil and gas companies, but also in other fields as well. There's definitely activity happening there. With oil and gas and companies, obviously the budgets are incredibly high. So oftentimes when we talk about these mega deals, they are deals that are above $1 billion. So oftentimes these are seen more in the oil and gas sector, but that doesn't mean that there aren't slightly smaller deals happening across the industry.
Yeah, no, true. Thanks. And my last question is about drivers and challenges of renewables. You touched a bit of them before, but let's expand on this. So in general, from my point of view, I can tell as the main driver of renewables is, of course, the climate change and the net zero commitments are all these reasons for of course, the development of these technologies. But at the same time, and you mentioned that before, I'm thinking about the recent macro events such as the pandemic, the geopolitical instability, you mentioned the recession. So there is uncertainty at the moment, and I'm thinking that it might in a way prevent or delay the growth of the sector. So my question is, what are the main drivers and challenges of M&A in the renewable sector?
Yeah, it's a really good question. And I think it's interesting that you bring up inflation as well as the pandemic. And I think sometimes we try to give a really short answer and we say, this hindered its growth or it aided its growth. But really, in a way, these factors have contributed both in the growth and hindrance of the growth of this sector. So just to give an example, the fact that there has been geopolitical turmoil, on the one hand, during periods of strong instability, people feel less inclined to spend and invest large amounts of money in industries that are potentially still seen as a little bit riskier. So renewables is still seen as a little bit riskier than fossil fuels, as we, have been dependent on fossil fuels for decades. At the same time, it also definitely pushed a lot of companies to feel, or even governments to feel, that they wanted to shift this dynamic where they felt very dependent on one technology alone, one source of energy alone, such as fossil fuels, such as gas, but rather they wanted to diversify where they got their energy sources from. And this is when renewable energy comes in, because a lot of countries can not only just import it, and so maybe just feel really dependent on one country alone, which we have seen has had a lot of negative effects, but also could potentially, harness their own natural resources in different ways and be able to produce renewable energy themselves. So yeah, I think it's interesting that it can be argued sort of both ways. And well, I think outside of that, some general drivers that I have found has been the fact that there have been great technology advancements. So there's been a lot of improvements in solar and wind energy. This has led to the technologies become more efficient and to drive down the costs of levelized costs of electricity. So these assets have then become more lucrative and therefore way more appealing to investors. Another thing that can be seen in both ways is the policy and regulatory support. If the government gives a lot of support, whether it's through, tax incentives or government-backed pools of capital or policy changes to enhance investment, then we see an influx of deals. And if the government withdraws its support, we see that the deals stop to happen to the same extent, So again, I think that the drivers and challenges sometimes can be the same, but depending on different periods of time and what is happening more specifically, then they can play one role or another. But yeah, I think these are very important. So for example, the US Inflation Reduction Act, the IRA, was passed into law in mid 2022. And this had a really big impact, not only because it spurred significant investment in the EU&R sector in the United States, energy utilities and resources, but it also led, for example, Europe and other countries to create their own incentive packages. So Europe, for example, with the Green Deal industrial plan, or Japan with its Green Transformation Act, all led to an increased level of investment in low carbon infrastructure projects. I think, lastly, just to wrap up on the last few challenges, I think one thing that we don't often take into consideration is labor shortage and logistics. So there's been a rapid growth in this in the industry, and these are all new technologies, and we are still lacking the skilled workers that can deliver this ambitious pipeline of renewable energy assets. And unfortunately, we're not seeing the right training or even the right appeal for workers to, become experts in this sector. So we are probably predicting a workforce gap that is going to grow significantly in the future. And same thing with logistics, things that we might not think about, such as the size of these wind turbines that are just huge, to be transported from location to location to be installed. That is something that is very tricky. So the lack of suitable vessels for transports or skilled workers for its installation or maintenance, these are all factors that hopefully we will be able to solve in the future, but currently are hindering the growth of renewables and therefore failing to appeal investors as much. But apart from this, the renewable energy industry is definitely very much growing. And more about what the key trends that we are predicting up to 2030 will be discussed in my upcoming webinar. So hopefully I will see you then.
Definitely, we will see you then. And thank you very much, Clarice, for this insight. You can find the webinar registration link in the episode description. Thanks all for listening, and from us in Thematic Intelligence, see you next time.